So for those of you asking me to make a video on how to trade on derivatives as a beginner, this is a video to cover all of that. And if you're here and you're watching me on this video and you haven't claimed your reward bonus from Notcoin, this is how you're going to do it, right? You go here where we have more on your Bybit, right? On your Bybit account, you click on that, and scroll down to where you have rewards hub. Scroll down. All right, under events, there is the rewards hub. This is the rewards hub. You click on that, and if you haven't claimed it, click on this, your rewards. Click on rewards. If you have not claimed it, you click on claim. But if you have claimed it, it will be showing you to use it. Now you click on use, right? Click on use. Okay, first of all, click on this rewards bonus to check the details. So they say this your $50 worth of USDT is a bonus for derivatives. Bonus strictly for derivatives. Are you seeing it? And this is your reward ID. This is your description. Description is trading bonus. Product is derivatives. It can only be used to trade pairs. Only available for pairs with USDT as the quote currency. You cannot trade pairs with another quote currency. Only pairs with USDT as quote currency will be traded with this bonus, right? I claimed this bonus about a day ago, and it's going to expire on the 17th of June. That means we have about a month to trade this pair. Okay, I've made about 2 point something, or about 3 points. I've made about $3 so far from my bonus. I've already traded and made a profit of about $3, right? So, but I'm currently on a trade, and I'm expecting to make more profits on it. My target is to make at least $50 to $100 from this bonus. All right, so it's a free bonus. If you lose this bonus, there is no emotions attached. It's not your personal money. It's just a free gift. So I'm making this video so that you will learn how to place a trade with derivatives. Now you click on use. Let's click on use to learn how to use it. Click on use, and then we are here. Currently I'm on a pair called 1000 Purple USDT, and as you can see, although I have a pending order for it, it didn't trigger at the time, so I jumped on it because I saw a potential of it pushing up, right? So this is how you're going to place your trades. I'm going to be using $1 to explain this, because you can enter your trade with as low as $1. All right, so now when you get here, you're going to be checking. Let me click on charts, under charts, click on that, click on charts. I'm taking my time to explain this very well. All right, click on charts or trade. Let's go back to that trade and click this drop down menu to select any pair of your choice. It doesn't have to be 1000 Pepe. Click on this to select any pair of your choice. I clicked here to select any pair of my choice, and your pair should be under perpetual. Do not make that mistake of, don't click here, sorry, don't click here, don't click here, don't click anywhere else. Only click perpetual. It should be under perpetual. Automatically it's under perpetual, so make sure it's still under perpetual. Now you select any of the pairs of your choice, any of the pairs. Is it BTC, USDT? Whichever pair you have done your analysis on, just click on it to place a trade, right? Any pair at all. There are a ton of pairs here, a ton of pairs. So whatever pair you're choosing or trading should have this quote currency of USDT. All of these pairs have USDT. They are under USDT. They are under USDT here. So that's that. So we are on 1,000 per pair. Okay, let me use another pair as example. Okay, let's use this not coin. All right. Mind you, whatever thing I'm doing here is not a financial advice, neither is it a signal for you to trade. It's just an explanatory video on how to trade derivatives. So here we have not USDT, and make sure, okay, if you're trading this bonus, make sure you're on isolated, okay, isolated margin. Probably you might come across cross margin. If I click on that isolated, if I click on the drop down menu here, we have isolated margin. This is my current margin, right? Now you slide right and you see cross margin. You slide again, you see portfolio margin. You see this cross margin, right? Let me explain first. This isolated margin means for that bonus you're giving, that $50 bonus you're giving, if you're trading with $50, if that $50 becomes liquidated, if you lose that $50, it's not going to affect the order of the money in your order, the money, your real balance is not going to affect order of your real balance. But if you use cross margin, it means it's going to cross across to order of your balance. That is, if you lose, okay, if you were having like 100 and something dollars in your account, and after losing your $50 bonus, the margin was not enough, they are going to be using the remaining of your balance to hold that trade for you for as long as you want to hold it, okay? So it is very risky to use cross margin, except you have that risk appetite, okay? So make sure that you are on isolated. Make sure this isolated is selected. Make sure isolated is selected, all right? Do not select cross margin. Do not confirm or select cross margin. All right, that's that. So I already selected isolated, so it's showing isolated. Now for your leverage, this is where you find your leverage, where this 10x is. This is where you find your leverage. I'm taking my time to explain this for beginners, complete beginners. You haven't traded futures before, although you might know how to trade, but you don't know how to handle this perpetual contract. This video is for you. So click on 10x. Now this leverage means, for instance, you want to start a business. Probably you want to be selling iPhones, and one iPhone is about 100,000 naira, and you want to get 10 iPhones, and probably the only amount of money at hand with you at the time was 100,000 naira. And you have this mindset that, oh, if I can afford 10 iPhones, I'll be able to make profit. And okay, let's say I buy this 10, each of these iPhones, I buy these iPhones at 100,000 naira each, and my target for this iPhone is 120,000 naira. Now you're using 10x. You're using 10x to buy one. To buy 10x means they are going to be multiplying your 100,000 naira by 10. That is, you're borrowing 9 additional iPhones. You're borrowing 9 additional iPhones. So leverage is like leveraging or taking advantage of a particular thing that you have, of your resource, to make sure that you make profit. That is, if you make, let's say if you make 20,000 naira, that is, if you make 20% of that your 100,000 naira on that iPhone after selling it. If you use 10x leverage to sell that iPhone, it means that you have made 20% times 10. That means you have made 200% of that iPhone sold. That means you have made 20,000 naira times 10. You have made 200,000 naira on that trade. Okay, that is the same thing as leverage in this cryptocurrency. So as you can see, I'm on 10x. Make sure that if you're trading, use a reasonable leverage from 3x leverage to maybe 20x or 25x. Don't be tempted to multiply your leverage. Do not be tempted to multiply your leverage. Don't be tempted to multiply your leverage, okay? Don't be tempted to multiply your leverage more than necessary. Else, you're going to be liquidated on time. So the lower your leverage, the safer you are. Although it depends on your risk appetite. But this video is just to show you how to set up and trade your derivatives. All right. So next is limit. Next is your market orders. Right. If you want to place a trade, you either set it at a market, a limit, a conditional, a chase limit order, a scaled order. But for the sake of this video, we will be talking about the limit and the market orders. Right? Limit means I want to take this trade at a discount. Okay? So if you are using limit orders, you're going to be placing your trades below the current market price for a buy, for a long. If you want to long a trade, for a limit trade, you place your price below the current market price. While if you're going short, you place your trade above the current market price. So that's how to place your limit. Then for the market order means you're buying immediately at the current market price. Right? So if you want to enter this trade right now, you're just going to be entering at 6011. That's the current market price, right? It's fluctuating. So anywhere the price triggers, that's where anywhere the market price is, that's where the price is going to be, your trade is going to trigger at. So that is for market order. So I'm going to be using $1 to do this, to make an example of this. So now this trade is under the chart, is at 0.0060, right? So I want to be entering this trade at 0.058, right? I want to be entering this trade at 0.0058. So I'm going to go long, click on go long, right? So I type 0.00558. Then the quantity of knot I'm going to be using is let me use a certain percentage of my total balance. A certain percentage. Okay. Okay, let me place this limit at 5.7. Let's leave it at 5.8. Let me not confuse you guys. So now your target profit should be above your entry price, and your target stop loss should be below your entry price. Target profit is like, I want to sell this at so price. In case I'm not available online, let this trade trigger at certain price like this before it goes against me again. All right, so you're going to either set your target price by percentage or by the price itself. So for instance, I'm going to be setting my target profit at maybe 20% of 20%, right? At 20%, and then my target stop loss at maybe 5% or thereabout, right? So as you can see, my risk to reward ratio is reasonable enough, right? Is reasonable enough. I'm going to be risking 10%. I'm going to be risking 10 to get 53%. 10% to get 53%. So it's reasonable enough. So that's what you do. All right. So I'm placing this trade right now. Clicking on confirm. All right. So check my orders. Wait. All right. This is it. Okay. Look at my order. This is my limit order. This is my limit order price. This is my target profit and loss. All right, so that is it. I'm going to be canceling this because I've not done my analysis on this. I don't want to take that trade. So let's go back. So that's it. That's how to place your trades. If there is any question you don't understand, if there is any question on what you don't understand, you can leave it in the comments of this video. As you can see, I have my orders and my position here. You can choose to cancel your order. Here by clicking cancel, or if you have a choice of changing your target profit or target SL, you can adjust it by clicking on modify. Click on modify, and then you edit the prices here by clicking on take profit, stop loss, and all of that. So let's go back, and you can choose to cancel your running position. You can cancel it by clicking on close by, or adjust your TP and SL, or just by setting your trailing stop. So that's that, guys. I don't want this video to be a very lengthy and boring one, so I'll see you guys in the next video. I hope you understand. If you have any question or whatsoever thing that you want to say, just leave it in the comments and I'm going to answer everyone. All right, see you guys in the next video. Bye.